Have you ever wondered what the future holds for Bitcoin? It's a question that buzzes around the collective mind of the digital world. Will this enigmatic currency continue to scale the heights, or will it tumble into the abyss? Predicting Bitcoin's price is no easy task. It's like trying to predict the path of a butterfly in a hurricane. The complexity and uncertainty that shroud Bitcoin's future are what make it so fascinating. No crystal ball can accurately forecast Bitcoin's trajectory. It's always a thrilling ride on the roller coaster of cryptocurrency. So what are the key factors that influence Bitcoin's price? First, we have market demand. As with any commodity, when demand increases, so does the price. Then there's the cost of mining, which isn't as simple as digging in the dirt. Regulatory news can also send Bitcoin's price soaring or plummeting. Technological advancements and market manipulation are two more critical factors to consider. Understanding these factors will help us predict where Bitcoin might be heading. First off, let's talk about market demand. The principle is simple. The more the demand, the higher the price. And this rule applies to Bitcoin just as it does to any other commodity. But what exactly drives the demand for Bitcoin? That's where things get interesting. One key factor is institutional interest. Over the past few years, we've seen more and more financial institutions dipping their toes into the world of Bitcoin. They're buying it, they're trading it, and they're even offering it to their customers as an investment option. This is a big deal because these institutions have deep pockets. When they buy Bitcoin, they don't just buy a little, they buy a lot. And when they do, they reduce the supply available on the market, which can drive up the price. Now let's talk about scarcity. Bitcoin, unlike traditional currencies, has a finite supply. There will only ever be 21 million Bitcoins. That's it. No more can be created. This limited supply creates a sort of digital scarcity, which can potentially increase demand. After all, everyone wants what they can't have. But it's not just about scarcity. Bitcoin's decentralized nature also plays a part in its demand. It's not controlled by any government or organization. It's controlled by the people who use it. This gives it a level of freedom and independence that traditional currencies just can't match. And for many people, that's a very appealing prospect. Lastly, let's not forget about speculation. Many people buy Bitcoin not because they want to use it, but because they hope its price will go up. They're betting on the future, and their bets can drive up demand, and therefore, the price. So, the more people want Bitcoin, the higher its price can potentially climb. It's a fascinating dance of supply and demand, scarcity and speculation. And it's a dance that's likely to continue for many years to come. Now let's dive into the world of Bitcoin mining. Mining Bitcoin is not a walk in the park. It's a complex process that involves solving intricate mathematical problems, and it requires a significant amount of computational power. This, in turn, leads to high electricity costs. So, what does this mean for Bitcoin's price? Well, the cost of mining Bitcoin effectively sets a floor price. Miners are unlikely to sell their Bitcoin for less than it costs to produce, and this can influence the market. But there's another factor at play here: halving events. Every 4 years, the reward for mining Bitcoin is halved. This increases the cost of mining because miners are getting fewer Bitcoins for the same amount of work. Consequently, miners may be compelled to sell their Bitcoin at a higher price to cover their increased costs. Therefore, the higher the cost to mine Bitcoin, the higher its minimum price. Regulation, the unpredictable force in the world of Bitcoin. Now, if you've been following the Bitcoin narrative for a while, you'll know that regulatory news can cause drastic price swings. This wild card in the deck of cryptocurrency can either boost Bitcoin's value or send it tumbling down. Let's take a look at some examples. China, one of the world's largest economies, has had a tumultuous relationship with Bitcoin. When the Chinese government first cracked down on cryptocurrencies in 2017, Bitcoin's price plunged by 30%. However, this didn't spell the end for Bitcoin, far from it. The resilient cryptocurrency bounced back, proving its ability to weather regulatory storms. Conversely, when countries embrace Bitcoin, it's like a shot of adrenaline to its value. El Salvador is a prime example. In 2021, this small Central American country made history by becoming the first to accept Bitcoin as legal tender. This bold move sent ripples through the cryptocurrency market, giving Bitcoin a significant boost. But it's not just nation-states that influence Bitcoin's price. Regulatory bodies such as the US Securities and Exchange Commission play a massive role too. Remember when they rejected the Winklevoss twins' proposal for a Bitcoin ETF back in 2018? That decision sent Bitcoin's price spiraling downwards. But here's the thing about regulation. It's often as volatile as the cryptocurrency market itself. One day, a country might ban Bitcoin. The next, it could embrace it. This unpredictability means that even the most educated predictions about Bitcoin's future can be thrown out the window in an instant. That's why it's essential to stay informed. Keep a close eye on the news, follow the decisions of regulatory bodies, and pay attention to the stance of influential countries. Remember, knowledge is power, and in the world of Bitcoin, that power can translate into the ability to navigate the market's highs and lows. So, keep an eye on the news, as it can significantly shake up Bitcoin's price. Technology, the game changer in the Bitcoin universe. Let's delve deeper into this intriguing aspect. It's no secret that the bedrock of Bitcoin is blockchain technology. This decentralized, distributed ledger system was what made Bitcoin a reality in the first place. But what if I told you that advancements in this very technology could be a significant factor in influencing Bitcoin's price? Consider this. What makes Bitcoin attractive to many is its promise of swift, secure, and global transactions. But it's also known that Bitcoin's transaction speed isn't exactly the fastest in the world of digital currencies. Now imagine a future where improvements in blockchain technology significantly speed up Bitcoin transactions. What do you think would happen? Quite likely, Bitcoin would become even more attractive, potentially driving up its price. And let's not forget about security. Blockchain is hailed for its security features. Each transaction is recorded and verified across a network of computers, making it nearly impossible to tamper with. But, as with any system, there's always room for improvement. Suppose in the near future, we see advancements in blockchain technology that make Bitcoin transactions even more secure. This could make Bitcoin an even more appealing option for those concerned about cybersecurity, thereby potentially pushing its price upward. Another factor to consider is the scalability of Bitcoin. As more people start using Bitcoin, the blockchain needs to handle a higher volume of transactions without slowing down. Technological advancements that improve Bitcoin's scalability can make it a more viable option for widespread use, which could, in turn, increase its value. So the more advanced and secure Bitcoin becomes, the more valuable it can potentially be. Remember, technology is a game changer, not just for Bitcoin, but for any innovation. As we move forward, those who keep pace with technological advancements are the ones who stand to gain the most. Finally, let's talk about the dark side of Bitcoin, market manipulation. Bitcoin, like any other market, is not immune to the whims of its largest players, often referred to as whales. These are individuals or groups who hold a significant amount of Bitcoin. With their massive holdings, whales can dramatically shift the price of Bitcoin, either by buying large amounts to drive up the price, or by selling off their holdings to bring the price down. This can create a ripple effect, influencing other investors and causing drastic price swings. An even more insidious form of manipulation is the pump and dump scheme. Here, manipulators artificially inflate the price of Bitcoin by creating a buying frenzy, only to sell off their holdings once the price peaks, leading to a sharp price drop. This leaves unsuspecting investors holding the bag. So remember, while Bitcoin holds great potential, it's also subject to manipulation. So, what's the future of Bitcoin? As we've explored throughout this video, the future of Bitcoin is shaped by a myriad of factors. Market demand, for instance, continues to play a pivotal role, with increasing interest from institutional investors hinting at a potential surge in value. Mining costs, too, can't be ignored, as they directly influence the profitability of Bitcoin mining, and by extension, its market price. Regulatory news is another key player. Governments around the globe are grappling with how to approach this digital currency, and their decisions can send ripples through the Bitcoin market. Technological advancements, especially those enhancing Bitcoin's scalability and usability, could also drive its value upwards. Yet, we must also acknowledge the role of market manipulation, a dark underbelly that can disrupt Bitcoin's price trajectory. While predicting Bitcoin's future is no easy task, understanding these key factors can help us make more informed decisions. Remember, the future is not set in stone, and neither is Bitcoin's price.